Today we are talking about life insurance. Defining life insurance is the contract between an insurance policyholder and an insurer, where the insurer agrees to pay designated beneficiary a sum of money on the death of the insured person. Life insurance is one of the most important type of insurance to have. Financially protect your in the event of your death. Life insurance can be used to help pay for final expense like funeral costs and outstanding debt. Can also provide your family with money to live on if you are the primary breadwinner. There are different types of life insurance policies, but they all have one common goal: to give your loved one financial security after you are gone. Most basic type of life insurance is called term life insurance. This type of policy provides coverage for a set of periods of time, typically 10, 20, or 30 years. If you die during the term of the policy, your beneficiaries will receive the death benefits. If you live to the end of the term, the policy will expire and you will not receive a death benefit. And other type of life insurance is whole life insurance. This type of policy does not expire after a set of period of time like term life insurance. As long as you continue to pay the premium, the policy will remain in force. Whole life insurance is also has a cash value component, which means that the policy build up cash value over time. You can borrow against the cash value of your policy, or even the for its cash value. Essential that you choose the right type of life insurance for your needs. Should also make sure that you are getting the best possible rate of your life insurance policy. Premium: this is price you pay per week, month, or another set of period. Beneficiary: the individual or individuals who will receive the financial benefits when the insured dies. Insured: this is individual who is covered by the policy and whose life is protected when this person dies. Payment will be made the beneficiary. This is the person who bought the policy. It is usually the insured. For example, if I purchase $1,000 insured on myself and name my children as beneficiaries, I am both a policyholder and insured. If I obtain a $20,000 policy on my spouse, I become the policyholder while she become the insured. The policyholder has the option to cancel and change the beneficiaries on the insurance, and the insured does not have this legal right unless they are the policyholder. This is crucial information. So, can someone buy a life insurance policy on you and you have no legal authority to change it? Yes. When someone purchases a life insurance policy on you in New York, they must usually have you consist by signing a form exception to the rule. Or small policies taken out on spouse, usually 15,000 or less, and children under the age of 15. If you did not give your consent and found out about the policy after it was purchased, would then need to take extra legal measures. Now we are discussing about cash value. Cash value of a whole life insurance policy is money you have available to loan out. You can spend this cash value from you already paid premium. However, taking out this money is not advisable unless it is an extreme financial emergency. Face value: the agent's initial non-negotiable sales pitch. This is the amount the policy will pay out. No debts or penalties are associated. Term life insurance: this kind of coverage has a set duration, 10, 20, or 30 years, and then it ends. In New York, the term is until you are 18 years old and then it expires. The issue is that once your term is up and you meet the requirements of additional coverage, it will be whole life or payment insurance, at which point your rate will be higher because you are many decades older. When you first bought your insurance, you were healthy and fit. However, during the 20, 30 or 40 years of your life, you have acquired a condition that the insurance carries considered unreversible. This might be bears, cancer, diabetes, cancer, or stroke. You cannot get any more insurance now because you are still alive. Guess what? The insurance company does not refund your premiums. Instead, it keep all of your money since it has insured you for so long. You are out of luck now. That is how it works. Whole life insurance. Now we are talking about whole life insurance. This insurance is guaranteed for the rest of your life. It is never terminated. The policy price does not change, so it will not rise as you age. The face value of the policy will not alter. It also acquires value in the form of cash. As a result, part of your premium payments goes towards a saving account for you to use when you want it. Also, whenever you need money, you may borrow it from yourself. More on this later. So why would anybody choose term over the whole? Many people choose term insurance over whole life insurance because it's cheaper. A $25,000 policy costs only $25 per month, while the entire life would be $25 per week. Both whole life insurance and term insurance have their advantages, which make them more useful in different ways. For example, if you have a $30,000 mortgage that will last for 30 years, you would get a $30,000 term policy covering you for those same 30 years. That way, something happens to you during that period, your family can use the money for the policy to pay off the mortgages and keep the house. That's why if terms insurance is suitable for covering a specific period in your life when there is a greater financial risk. What I find wrong and misleading is when financial expert act is as if whole life policies are useless. If you take the time to link about this is an ignorant perspective. The continually advocate for term life insurance as being cheaper and better. They say you can get more coverage with a term policy, but what happens when you live past the age limit? They never answer that question. For example, in New York State, insurer will not cover anyone over 80 years old for the term life insurance. After 80, your policy expires and there is no renewing it. Are out of luck. Have you ever thought about how much your life insurance policy might cost if you live to be older than 80-year old? A whole life insurance could cost as much as $40 per month, only for $6,000 if you can find someone to insure you. So why would you not get a much more cost effective whole life policy when you are younger and will most likely need it for a more extended period?